Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look as usual on the gold market. Today we have prepared the new weekly report and trying to link together some events that at first glance seems totally independable. So what's the relation between recent comments of the Tucker Carlson concerning the CIA involvement in overall processes in the United States and political life, why the Fed is buying mostly the short-term debt, why, although it is more logical to consider the investment, not the buying, the selling, of course. It's more logical to consider the investment and the issuing of the longer-term debt. It is cheaper, and with the inflation effect, it will be very cheap in the perspective of the 10 years, for example. And finally, how the recent World Health Organization concerning the rising of the accidents of the cases of the COVID is increasing. So at first glance, all this stuff is totally independent and has no relation, but in reality, they are not. And in our report, we have explained why all these issues are linked together, and it's coming from the one source. Report is mostly, it's appearing to be really thrilling to read, and we hope that you'll get the really big fun with this. So returning back to the short-term technical picture, it's not as interesting in the longer-term perspective. So we expect that in the nearest 1-2 months, it will be really big despair among the markets, because they will not get the confirmation of the suggestion of the first reversal from the Fed. As you know, it is widely expected that Fed is coming to the pivot, and very soon they will proclaim the dovish steps, cutting the rate, that the economy is coming out of the crisis and we're getting to the soft landing, all this stuff that we usually listen from the mass media. But we suggest in the nearest 2 months it will be big disappointment with this. As a result, although gold stands really very strong, so with the 5.5 interest rate, it shows very small pullback, but still it will remain under pressure, and we will not be surprised if, in some scenario, gold will be able to reach 18 even area. So this could happen. It will depend on the degree of the surprise that we will get. But potentially, if you'll take a look at the weekly chart, you will see that in general this is possible. Because we have this big weekly ABCD pattern, this ABC top, some interruption, this action to the upside. COP stands slightly below, as we have considered, around 1860, but OP stands around 18 even. If everything will go as we're suggesting, that's really with this surprising impact and keeping dry liquidity out of the market, gold could feel some pressure. So this might happen within a couple of months. But in a longer term perspective, we have no doubts that gold will start new big rally in the perspective of 1-2 years, hardly longer. So meantime, on the beginning of the next week, we think that bulls should take some pause. We think that for the bulls, it's time to wait a bit and see what will happen. Because although market remained and holds near the resistance area, the Friday performance looks not really bullish. So because market just spiked up, grabbing the stops above, and failed the chance to break the confidence and return right back down. Just for the few cents, market hasn't formed the bearish reversal bar. It has closed just a few cents above the lows of the Thursday. That's why it's not the bearish reversal bar, but it stands very close. On the 4-hour time frame chart, you could see that market is forming some kind of the widening consolidation. And by the classical approach, direction depends on the breakout of this consolidation. So if market will be strong enough to break it up and taken out of this top, the bulls could return back in the game and start searching chance to take the long position with them moving to the XOP with the same ABCD pattern. Downside breakout suggests we are going for the deeper retracement. By the current view, my personal suggestion is that bears have slightly better chances, mostly because of the performance here. So on Friday we talked about the bullish dynamic pressure with the dropping of the MACD and flat standing of the price, and this pattern has worried. Market has formed a new spike taken out of this top, and this is minimum target of the dynamic pressure pattern. But you can see that with this performance, further potential actually hasn't come, and its actual performance is over. So market just reached the minimum requirement, minimum target that it could be achieved, and returned back down. This also looks bearish. On the hourly chart, there are a few other signs that we see. First of all, by the classical, once again, school of the technical analysis. Here we have clear fake flag breakout, which calls as a bullish trap, sharp return back down, which could be treated together at the bearish engulfing pattern. That's we have. Besides, if I will change slightly the picture, you easily could recognize here the shape of the 127 head and shoulders, potential head and shoulders, right? Here is minor butterfly as well, stands, which means that bears theoretically could consider 1845, 1847 area right there for a potential position taking. The one thing you have to avoid this type of action, so we do not see a really fast upward action. If it will happen, do not take any short position. If it will be gradual, slow, something of this kind, but in opposite direction, head and shoulders will start taking, well, harmonic shape. That might be the chance to consider taking the short position with the stop somewhere above this area, and when the nearest target, the kind of the ABCD pattern somewhere around 1935, nearest confidence support. So let's see what will happen. That's theoretical that we could consider in the nearest time on gold. That being said, bulls should wait a bit and see what will happen. Chances could appear only if market will take it out of the stop and break the confidence on the 4 time frame chart. Bears, if nothing will be broken with this pattern, as engulfing as possible hand and shoulders, carefully could try to could consider taking the short position somewhere around 1946 area. That in 2 words what we have.